Hey, this is Iron Man reading for you. Question number 6. Answer in detail. 1. Explain the importance of microeconomics. Answer: the importance of microeconomics can be explained with the help of the following points. 1. Helpful in explaining price determination. Microeconomics helps in explaining the price determination of goods and services, as well as factors of production. 2. Helpful to understand the working of free market economy. Microeconomics helps to understand how free market economy works and gets regulated by demand and supply principles. Microeconomics helps producers to take business decisions about what to produce, how much to produce, etc. at individual levels. There is no intervention by government or any other agency in this decision-making process. 3. Helpful in foreign trade. Microeconomics is useful in studying the aspects related to foreign trade, such as effects of tariff, determination of exchange rate, gains from international trade, etc. 4. Helpful in economic model building. Microeconomics helps in understanding complex economic situations with its variety of models. Many terms, concepts, terminologies, tools of economic analysis of microeconomics have valuably contributed to the science of economics. 5. Helpful to businessmen in taking business decisions. Microeconomics help businessmen in formulating prices of products or services, minimizing the cost of production, analyzing profitability of investment, attainment of maximum productivity, etc. It also helps businessmen in demand forecasting. 6. Useful to government. Microeconomics is useful to government in framing economic policies such as tax policy, public expenditure policy, price policy, etc. Microeconomics also guides government in attaining the goal of efficient allocation of resources and economic welfare of society. 7. Basis of welfare economics. Microeconomics provides explanation for the conditions of economic welfare. It explains how the maximum welfare of people and society can be achieved by avoiding wastage of resources. Thus, microeconomics has many theoretical and practical importance as well as uses. 2. Explain the concept of macroeconomics and its features. Answer: the word macro is derived from the Greek word makros, meaning large or aggregate, total. Macroeconomics therefore is the study of aggregates covering the entire economy. It is also known as theory of income and employment, or simply as income analysis. The following are the features of macroeconomics. 1. Study of aggregates. Macroeconomics deals with the study of a nation's economy as a whole. It is the study of very large, economy-wide aggregates such as national output or national income, total employment, aggregate demand, aggregate supply, total investment, total consumption, general price level, etc. 2. Income theory. Macroeconomics is also known as theory of income and employment or income analysis. Macroeconomics explains the determination of the level of national income and employment and what causes fluctuations in them. Further, it explains the growth of national income over a long period of time and social accounting. 3. General equilibrium analysis. Macroeconomic analysis is based on general equilibrium analysis. This analysis deals with entire economy in the context of equilibrium. It studies the behavior of number of economic variables at a time, and takes into consideration their functional relationship and interdependence. It explains how aggregate supply and aggregate demand are brought into equality and how equilibrium between these forces determine price level as well as level of income and employment. This whole analysis involves the study of number of variables and their interaction. 4. Based on interdependence. Macroeconomics takes accounts of interdependence between aggregate economic variables, such as national income, total output, employment level, total investment and price level, etc. For example, it explains how change in the level of total investment will finally change the level of national income, total output, employment level and eventually level of economic growth. 5. Use of lumping method. Macroeconomics deals with the behavior of aggregates, that is, total values of economic variables related to whole economy. It uses method of lumping to deal with macro variables such as aggregate demand, aggregate supply, national output, etc. 6. Study of growth models. Macroeconomics studies in detail various factors that contribute to economic growth and development. Macroeconomics is useful in developing economic growth models. These economic growth models are used for studying economic development. For example, Mahalanobis' growth model emphasized on basic-heavy industries. 7. Study of general price level. Macroeconomics studies the determination of general price level. General price level is the average of all prices of goods and services currently being produced in the economy. Macroeconomics also studies the changes in the general price level that is trade cycles. 8. Policy-oriented. Macroeconomics, according to Keynes, is a policy-oriented science. Macroeconomic analysis helps in formulating suitable economic policies to promote economic growth, to generate employment, to control inflation, to pull the economy out of depression, etc. If you like my reading, please
subscribe Maha Notes India for more answers.